Hello traders. Today is the 17th of January 2012, and happy trading to you all. The time in London is 16:47. In New York, 11:47. Okay. Today New York is open. Okay, and we are looking on the 2-minute chart of the S&P 500. Okay. For those of you who are new to us, we are the TSTWSYS008 traders, and our website is www.stochastic-magd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It is neither a solicitation or an offer to buy or sell any financial instrument, and it is primarily for the TSTWSYS008 traders. Okay, ladies and gentlemen, yesterday we posted a video on our channel on YouTube, George Trio channel, and we were talking about real-time trading challenge. Okay, if you haven't watched that video, that we titled real-time trading challenge. Okay, it's very important that you go and watch that video so you may understand clearly what we are talking about in this second video. Okay, now we are looking on the S&P 500 on the 2-minute chart. Yesterday I was talking to you about the market distortion. When we see a tall candle, when we see abnormal candle, okay, very often, okay, the market will try to rectify itself, okay, because when the markets, according to the stable data in the market does not, okay, go vertical, okay. When we see the price going very vertical, that is the price going fast in vertical move, that's a distortion, okay. It's a pure distortion, okay. It doesn't matter whether it's because of a news, a very important news. It doesn't matter whether it's for fundamental reasons, okay. It doesn't matter whether it's due to volatility or any excitement. It doesn't matter whether it's because of a manipulation or any kind of activity in the market, okay. But if the price, okay, does not, okay, move in a vertical direction, it doesn't move in vertical, okay, this is a distortion. Whenever we see the price going vertical, we will highlight the range of the distorted candle, of the abnormal candle. Here we will draw a line to highlight the range. So on top of it we'll draw a line like this, and below it I have a line, another line already here, the blue line. Now we will wait for the price, we will wait for a clear-cut signal to sell, okay, because according to the stable data in the market, after a distortion, very often, not always, the price will try to rectify itself, okay. The price will try to rectify itself very often. We don't know how long it will take for the price before it rectifies itself, but very often the market will correct itself, okay. So this is a distortion. We know for sure that is a distortion. We know that also that in most cases the price will try to come back down to retest the low of this candle because it's a distortion, okay. Sometimes the price may not, but 9 out of 10, okay, 9 out of 10, or you may say 8 out of 10, okay, 80% of the time the price, okay, will correct itself because it's a distortion. So we want to be part of it because it's a high probability trade, okay. We want to look for an opportunity to sell if the opportunity to sell is given to us, okay. You can see that the price return back below the range, okay, below the inside the range of this tall candle, retest it here, okay, and start going down, okay. So at this point a trader may decide to sell, okay. There's nothing wrong with that. But the first target is this support level here. But look what's happened. As the price came down to this level, it started turning around, okay. You know that it's not going to go down, okay, because the first target is this one here. The price did find a support there, it started turning around. Close it, come out, okay. Now you just try to be very, very patient and trading like professional trader without cutting corner, sticking to the 5% money management rule. So now you see the drill, okay. It did below it, you retest it on a 2-minute chart, the trend is broken, you sell. you haven't made a wrong decision. It start going down. You know that this is the first challenge. It turn around. It come back. Now it's sitting above it. Very often, the line above the abnormal candle will provide support to the price if the price is above it here. Now you can see this line is now a support level. But if the price below that line, okay, it's a resistance level. As you can see, it did below it and retested here, and the price did find a resistance there and went down before going back above it. Okay, so we want, just because we know that this is a high probability, okay, scenario, which means whenever we see a distortion or a vertical move, the market 80% of the time will try to rectify itself, which means bringing the price back down, okay, to retest the low of this distorted candle. So we want to look for an opportunity to sell. If the opportunity to sell is given to us, so now we are back above this line now, okay. So what we can do, because the price did find a support here before, okay, you can decide to sell, okay, as soon as the price, okay, closes below this candle. But now I have another trend line here, okay. I have another trend line here, okay. So we just keep watching the price now. Some aggressive traders may say, okay, George, okay, I will sell it straight away and place my stop loss above it. That's perfectly okay, but you must adhere to the 5% money management rule. Okay? Very, very important. There is another triangle here, ladies and gentlemen. If you pay attention carefully, there's a triangle here. Okay? This triangle here. The price coming out of the triangle now. Okay? See? Some trader may decide to sell as soon as the price closes below this white horizontal line, placing their stop loss above, okay, the top of this triangle. That's a valid sell, okay. So you watch it now. We're waiting for it to close below. If it closes below this white line clearly, wait for the candle to close below this horizontal line here. It did below the triangle and close it below the support level. You wait for the candle to close. You can perfectly sell it and place your stop loss above this level here. It's just a very tiny stop loss. It's an excellent place to enter the trend, okay, if you want to sell it, okay. But so far, nothing is given to you now, okay. You just wait patiently. But you have to understand the principle, okay, or the foundation, okay, of what you are trying to do. What you are trying to do is that you are trying to take advantage of, okay, a pattern in a market, because when you are trading, you are always looking for a pattern, or you are looking for, okay, a stable data, or you are looking for a truth, something that is constant in the market. Because if you build, okay, on lie, it's not going to last, okay. You want to build on something that is strong, and those are the things that we call the stable data in the market. So one of the stable data that I'm talking about here is that whenever the price, okay, is distorted, okay, the market very often, okay, 80% of the time will try to correct itself. So now we know it, okay, we know it because, well, how do we know? Because we have seen it many times. That's what we know, pure observation. We didn't invent it, we didn't create it. We just keep our eyes on the price every day, looking, try to communicate with the price, try to understand what the price is telling us, so we can take advantage, okay, of this, okay, understanding, okay. So you see now, okay. So all this, okay, blah 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 blah, is about understanding the language of the price. So in the language of the price, it doesn't go vertical. That's it. So we know that, okay. When you go vertical, 80% of the time, it will try to come back and correct itself. We know that also. So now in this case, the movement was to the upside, so we will look for opportunity to sell it. So we expect in the S&P 500, okay, to come back down in a level of 1290. But we are not trying to, okay, enforce that, okay, understanding on the price. But we wait clearly. Because we know something, we have an edge. We know something, so we have an edge. So we just wait clearly and be patient and wait. When it's starting, we will take advantage of it, okay? That's all we do, okay? So all I'm doing now, I'm just sitting here and watching, okay, and the price to close, okay, below this white line, clearly bearish below this white line, and then I will sell, and my stop loss will be above this white horizontal line, which gives me a very tiny stop loss with, okay, the risk reward ratio, okay, talking about a reward risk ratio will be quite good because I can perfectly sell the S&P 500, okay, with a tiny stop loss, and you see how far you go, down to this level. Isn't it nice? Okay, look at it. Isn't it nice? But so far, I can't sell it. Though the price out of my triangle so far is still sitting on this support level here. I want to see a bearish candle to clearly close, a bearish candle to close below this line. Once I see that, I will sell, okay? What I'm going to do now, ladies and gentlemen, okay, I'm going to show you the time again. The time in London now is 58 minutes past 4 p.m. in New York, 11:58. Now we are now going into the gap period, as I explained to you last time. Okay, the gap period. Okay, so I will pause the video. I will pause this video now and waiting for the signal. As soon as the signal, okay, is given, I'll come back again, okay, and resume, okay, the recording of this video, so we can avoid that the video, okay, is too long. Okay, so pausing the video. Hello traders, as you can see, the price coming down below, okay, the support level here, okay, it's going below it. But what we will do, we will not rush and just sell straight away. Now we can sell it now because this candle now, as you can see, this candle here is, okay, is close below, okay, the trend line, so we can sell now. Okay, so we're selling the S&P 500 at 1299, placing our stop loss at 13. Okay, we put it at 13. Let's say 1310. Okay, 1310. Okay, 1310. So 1299 entry point, and stop loss at 1310. Okay, the price now going back up, but we remain in the trade because the price, okay, manages to close below this support level after coming out of this indecision zone. The triangle is always in decision zone. Okay, it came out of the triangle, we didn't sell it. Now we allow it to close below the support level. Now we place our stop loss, okay, at 1310. Okay, so we let it run now. Okay, that's it. There's nothing else we can do. All right, so all we are doing now, we can just sit down and watch the price, play what you want to do. We are not going to close this trend. We just let it run and let the market decide what is going to take place. Okay, that's it. Okay. So there's nothing to say anymore, or to just sit down, okay, and enjoy it. Okay. I'm still here myself playing with the chart because there's nothing else to do. So we just wait now, okay, and just watch the price, because when you are posting a video live now, it can be time consuming because the price doing what the price will do, and it will take the time that it will take. So there's no much to say here, but as we have covered many things, talking about the market distortion and the stable data, and waiting for the price itself, the number one indicator, to give the signal before you enter the trade. Okay, that's the most important thing that you need to remember in this video. Okay,